Good evening. Ira Epstein of Linn & Associates with your metal market wrap-up for this Wednesday, June 9th, 2021. We're getting on to 5:30 in the afternoon. So as you can see, down another $4 in early evening trade, silver down another 10 cents. Copper market got hammered today because it didn't like the Chinese data that was coming out, and I covered that in my full research report this morning. The dollar sort of mixed against the euro. Well, you get the European Central Bank meeting tomorrow. Why would you want to do anything right in front of that? In the Canadian dollar, the Bank of Canada stood pat today, not doing much of anything one way or the other. I think everybody's waiting to see what the U.S. does on this meeting, but I think it's early yet. I think it's later in the summer that you're going to get things popping. It could come anywhere from some of the central banks starting in July right on through the fall, but that's when I think that it gets much more interesting. Right now, even with our bank meeting coming up, I don't see much there. When I look at gold on a weekly area chart of closes, you're still up 1.12% at this point, $21 for the week. The daily chart, you're having some problems on the chart, and when you look at the swing line, you have lower highs, lower low. That's a bearish formation. The support should be the 18-day average of close initially, like it was back here where I'm pointing. If it slips through, well, wherever the 200 or the lower Bollinger Band comes in, the closer would be the support. And speaking of Bollinger Bands, notice how this is climbing all the way up here right now. So as that market's doing its climbing, resistance is coming in. This morning when I did my morning futures wrap, I was going like this. And I said, what's that the sound of? I said, volatility coming out of the market. And that's what you're seeing. When these Bollinger Bands narrow in, it's not because it's volatile. It's the opposite. Volatility is coming out of the marketplace, and it's screaming that story to you. That's how the formula starts working. And as the volatility comes out, the algorithm adjusts itself into resistance and support zones as it narrows in. We have the trend down, the swing line. We have the bias up since the market is over the 18-week average, so that keeps those two neutralize each other. And momentum is still correcting an overbought condition. Now that the numbers are under 70, they're no longer in overbought territory. It just happened. When we look at the gold-silver ratio, it seems to just be stuck here against that 18-day average of closes. If it can break back under it, that would be the first sign, the very first sign that silver wants to start gaining on gold. But one day doesn't do it. You get under, you see you can stay like that, you get over, then you fight, and you see if you can slip back under. When looking at silver, it's still very much in a downtrend. You have lower highs, lower lows. Momentum has flattened out, and prices are stuck now almost every day. 1, 2, 3, 4, 5, 6, and including today, 7 days where it's hitting that 18-day average, and it too is bringing the Bollinger Bands in. So very narrow ranges here. The copper's been able to spend a lot of time in the lower quadrant in a correction zone after it peaked out, came down here. It's going nowhere on the downside after that initial correction, flattening out. You have the trend up. It's the opposite of gold and silver. Trend is up, but the bias is down, so they wipe each other out. Still in the bear stage in the platinum. The market's got the lower highs, lower lows, under the 18-day average. You had a bearish crossover that I pointed out right here. Happened on Tuesday, and the market has been spending time breaking, and that's to be expected in that. Maybe it caps itself off by hitting 1137.20. Rallies, they should be finding big resistance between 1194 and 1185.70. And in the Palladium market, the trend remains down. Yesterday, you had a big break, outside day down, unless you take that high out today, which is, when I say today being the Thursday trade, the trade still says the potentials for the lower Bollinger Band still bearish here. Getting into a territory that is still not oversold. That's why I still stay with the bear idea. In the dollar index, I would expect it to go nowhere as these Bollinger Bands keep narrowing in. I have a phrase that I call the psychiatry trade. And whenever you start narrowing in these bands and you're looking for moves, what happens is you hit the upper band, you typically don't go anywhere, lower band nowhere, and the market starts churning and building pressure, within the band so they can break out and create a trend one way or the other. I think it's trying to do that. Ethereum, they're talking about money now coming out of Bitcoin into Ethereum. It's still in a bear trend. You still have lower highs, lower lows. You've worked off an oversold condition. You'd have to get over this high right here. That number's 2867 to break this pattern at this point, and you're sitting here at 2620, so that's quite a ways off. I'm looking for resistance at 2736, the 18-day average of closes, and we'll see what that does. That's still going to be the number that I pay attention to. Each morning at 5:40, I record a video where I'm going through about 42 charts at a time for you, and I'm giving you ideas about it, but then it matches up with this idea. We're retail brokers at our company. Life goes in circle. What started here years ago comes back. People want to talk to somebody, and I have brokers with decades of experience. They're all been trained in what I do. They see the videos in the morning. They know where the trade recommendations are coming in, and you're invited to then call them up, discuss what I call my reports coming out or other market reports, get analysis from them, ideas. They're your eyes and ears during the market, and believe it or not, we talk to people on a telephone. They set a commission based on size of your account? No. Based on the trading need that you want. Why? The size of your account doesn't earn us interest, so it's the volume that you're going to do, and sometimes they're not even related. So they'll look at what they have to do, they'll make a guess as to how much time, and they'll give you something fair. Why? Because they want your business, they want you to succeed. If you don't, they know you're going to leave them, so maybe this is something for you. You have nothing to lose by giving us a call. Talk to one of our brokers. They'll be happy to explain how this all works. I'm Ira Epstein. You have a great day. I'll talk to you tomorrow.